Hello, gentlemen, and welcome to another Pal of You Market Research video. Today, I'm going to be describing, outlining, and visualizing the two futures that are available to us in this post-asset tokenization world. We are at this moment where real-world assets are being tokenized. Securities, stocks, real estate, bonds, all of these things are becoming tokenized. And it's just beginning right freaking now. So, on the other side of this tokenization migration, right, are two futures, a decentralized future and a centralized future. Now, like we covered in our last video, me and Larry Fink both agree that the next technological revolution is the tokenization of every financial asset. So, why is this happening? What are some of the benefits of asset tokenization? This is some of my original copy from a little while ago. And really, there's like four really big reasons for why assets like real estate, like bonds, like so many different types of assets will benefit from tokenization. So a lot of these asset classes are currently very illiquid, meaning that they have a hard time finding capital for, either providing loans or equity investments to that existing asset. So you can think about this in the context of like a bridge, right? Some like infrastructure level asset. And when we skip to the bottom here, these things are bifurcated, right? So there's a high barrier to entry to owning these types of assets, right? Because of all the paperwork, right? The costliness of doing all these legal and back office and government paperwork to actually just prove that you are an owner or stakeholder or lender to this type of project, right? Just the costs associated with becoming an investor in that asset is too burdensome and costly, okay? And obviously bifurcated, meaning like you can't own a small piece of it, right? Whereas on the other side of tokenization, you can own a tiny fraction of a bunch of different assets, right? And this is going to be especially interesting in the context of assets that are currently government owned or in a partnership with the government, okay? And so you can also think about this as being opaque because, a lot of assets right now, we have infrastructure assets in America, like just to continue on the infrastructure example, that are owned by China, right? Railroads, um, highway systems. Like we have things that are fully owned by people who maybe shouldn't own them, and we don't have any way of like finding out, and like we don't have like good systems for verifying who owns what in our current world, right? With all these private assets. So asset tokenization is really going to blur the lines between what a public and a private asset is, right? So in this next slide, I'm going to be visualizing some of my own, like I developed this architecture for what a decentralized application should look and feel like, and what roles need to be kind of, how should you say it? What roles need to be played out and what functions need to be played out so that you have a fully functioning and fully operational decentralized application that deals in the world of real world assets and securities. Okay. Now, you need basically three different sections or sectors of your decentralized application or decentralized autonomous organization or both, right? You need an origination, you need a tokenization, and you need a trading kind of technology. So this is something you're obviously very familiar with. This is like a DEX like function where you're just trading peer-to-peer trading on assets, right? That's pretty simple to understand. But with asset origination, I should say, which becomes token origination, right? Because we're tokenizing these assets, we're migrating them from being analog to digital. And I want to just to throw out one more example of how and why you want to digitize assets. It's kind of like I use this Yoda analogy in another video a couple weeks back. But Yoda in episode 1, The Phantom Menace, is literally this, right? In the movies before that, he's a puppet literally with like sticks, right? That people are, manipulating him with, and he's very limited in how he can express himself and how he can, as a character, can participate in the Star Wars movies, right? Whereas in episode 2, he's very expressive. He's able to fight Count Dooku, right? Like in that epic fight scene. So it's kind of the similar way. Like assets that are currently not tokenized, when they become tokenized or digitized, whatever you want to call it, are going to experience similar benefits to what Yoda did. Okay, so you, as the, if you're like saying working on the procurement or the origination, which means that you're basically finding assets that are not tokenized and you are looking to tokenize them and migrate them to your software, right? That is essentially what this origination box is. So you essentially have to set up like a procurement authority, which consists of financial advisors, engineering advisors, depending on the type of asset it is, legal advisors. A lot of people don't really realize that lawyers are already working for DAOs. Like I'm decently close with one of the lawyers for MakerDAO, and these guys get paid by the DAO to provide essential legal functions, lawyer functions, right? So this is already happening. So basically, you find an asset that's procured by this group of, you know, governments, token holders, doesn't really matter who, but community participants. And then you work with a digital securitization on ramp to digitize the asset. And then you raise like a special purpose vehicle so that it can then be represented on chain. So again, you find an asset, you do the due diligence on the asset with your team of advisors, procurement authority, all these people. You get set up to raise the capital by, basically setting up a special purpose vehicle with your digital securitization partner. You then basically represent that project, that the positions, the equity positions, or even because it can be a loan too, the debt investments or equity investments in this special purpose vehicle, and you represent them as tokens, more specifically security tokens. Okay. We don't security tokens is it used to be like a more interesting word, like phrase 6 years ago, but when Larry Fink says asset tokenization, he's talking about security tokens. Okay, so that will be represented as a security token ownership in this SPV. Now, you are basically then creating this treasury, which is this tokens area, right? And then you have like all of these different tokens that have to interact with each other. You have security tokens, you have that interact with different utility tokens. So people are trading in and out of, like, say, Avalanche, which is a utility token, or Ethereum to buy security tokens. And you could even argue that USDC is a utility token. And then you have smart contracts that are governing how this treasury is being mobilized, how liquidity is being stored in certain areas, how different liquidity pools are being incentivized, right? And that is all being decided via smart contracts, via governance token and governance token holders. Okay, so the governance tokens are governing how the liquidity is moving around so that it can facilitate a process for people who are not participating in these two boxes to participate in the trading ecosystem, because that's going to be the majority of where people are going to be participating on their platform, right? So say I come in and I'm an investor and I want to invest in one of these projects, right? Then I can just buy into the project. Or if someone already has invested in this project that was raised years ago, then I can trade tokens with them on that exchange that's internal to the software, right? So you guys have to think about this as we are walking into an era where software, okay, is going to host basically, like, you can create software nowadays that is essentially equivalent to like the Nasdaq and the not the SP 500, but the New York Stock Exchange, right? So this is essentially a framework for how you can take advantage of this moment that we're in, right? If you can find companies that are interested in having a digitized representation of their stock, right? And you're able to mobilize a community behind it, you can make a huge amount of money right now, guys. Okay. And it's more important than that, right? Because at the beginning of this video, I was telling you that we have two futures, right? So this is what a decentralized platform would look like, right? But a centralized application, right, looks very different. And you don't get to access or have any participation in any of this in origination or tokenization of these assets. This happens in a centralized manner. You, as the user in a centralized application for securities and all these things, you only get to participate on this layer, right? There's no option for governance. There's no option for participating in procurement. There's no option in helping mobilize what this treasury is doing, right? This is all behind the scenes. And this is what BlackRock and all these competitors want. So this is why I'm making this video, guys. We are still able to fight back and actually provide these decentralized services for these types of securities. It is a David and Goliath like situation because we're going up against BlackRock and all these institutions that have no interest in having a decentralized platform govern liquidity for equities and for different types of asset classes, right? But if we don't provide that option for publicly traded companies to come migrate over, for people who own land and real estate or different types of privately owned assets to migrate and host it on your platform, right? In a decentralized way. If the technology isn't even built out and that option isn't there, then we don't stand a chance. So this is something I'm going to continue to talk about more and more, is how to actually deploy, build, design, think about decentralized real world applications, right? Okay, guys. Well, that's today's video. I hope that was clear. I'll see you tomorrow.